What's up, guys? Welcome back to the channel. Today I want to go over a setup that I took some time ago that I haven't discussed yet, but I think it's very, very useful for you guys. So let's get started. All right, so we are at the GBP AUD chart. And before I get started, I want to say that usually I upload a bit more videos, but I've been on holiday, just got back. So apologies for that I haven't been that active. But I wanted to make this video to discuss a setup that I recently took and also to discuss how I can improve it. And maybe you can use this as well to improve your own trading. So I took a short in the GBP AUD pair and I shorted at the red line, targeted the green line. Stop loss placement I will go over in a second. But what is important is that my setup happened at a great location. You guys know I trade mechanically, which means whenever my setup happens, I take it. But from my experience from trading this strategy over and over again, I know that if they happen at great locations, the win rate goes up and I risk more on those trades. Now, this short entry that I took at this red line was at a great location. And why? This is a high of a supply zone. We had equal highs in this area, 3 equal highs. Price ran into it, took it out, and then quickly fell down, which means any liquidity up here has been absorbed. And basically all the buying up here has been absorbed by a bigger seller that wanted to be short. So that gives me the confluence that probably someone with a lot of money that wants to be short, absorbed all these buy orders up here, because people tend to buy breakouts at those area and there tend to be stop losses above equal highs. Stop losses from sellers are buy orders, and people buying the breakout are also buying. So a lot of buying as this level breaks, but price falls down and aggressively falls down. So that indicates absorption to me. And that's one of the confluence factors I use. As soon as that happens, I risk more on a trade if I see my setup. So that's a bit about the context. Now, if we go to the hourly time frame and we zoom in, you guys know what this is. Clear distribution range. So once again, that's another confluence factor. So we have a great location, we have a clear distribution range happening, and my mechanical setup happens. So a lot lining up here, and that's why I shorted this with a lot more risk than I usually do. So to give you my stop placement, it was, let me make it green. My stop placement was at, I believe, at this high. Yeah, it was above this high. So as you can see, I entered short at the red line, targeting low green line. It's a bit more than a 1-to-1. If I draw a fib, as you can see, it's just over 1-to-1. Now, again, that might seem small, but this is my way of trading. And if I go to my statistics, there's a 64% chance of price tagging my target before taking out my stop loss. So the odds of winning are way higher than the odds of losing, and the average R is a bit higher than 1-to-1. That means in the long run, I will be making money if I keep trading like this. Now, what's interesting about this setup is that I'm trying to improve my entries in these type of trades because I'm always looking for improvements. And usually whenever I see a breakout after a distribution range that is violent, so that doesn't really retrace but just drops, and we get a close, it tends to retrace before going to my target. Now, I prefer a fully mechanical approach, but I have been noticing that price tends to move towards the last bit of structure before it fell down. And that's this yellow box. If we see here, this is the last bit of support price made before we broke structure over here and closed below it. And whenever there's an aggressive move, it tends to retrace to the area. And if I entered at that area, look what happens to the risk reward ratio. It's around 2.7 R instead of 1.1 or 1.2. So that's a big difference. And you might wonder, why don't I always enter at these areas? Simply because I tend to miss more trades. For example, I enter at a breakout with momentum, and price tends to move just to my target without retesting anything. But lately, I have been noticing that if a move is violent, it tends to retrace towards that area. So sounds a bit vague. Hopefully you understand it. But I'm trying to build a sort of mechanical approach to entering at these areas and to get more out of my trades. And as you can see, it did hit target. I've been in the trade for quite some time because it kept ranging. And then it took out this swing high and then broke structure over here, stayed below there, and then we hit target. So again, I don't manage trades and it just went to target. Another thing I am working on is to increase my targets. And how do I increase my targets? Simply looking at the daily time frame. This is the next important swing point. This created this up move. And when price basically fakes out one side of the range, which it did here, it tends to move to the other side of the range because this is where liquidity is resting. So I also am testing bigger targets. This would have been the ultimate target. And as you can see, it would have been, this would have been 4R, around 4R if I entered at the yellow box. So it would have been around 4.5R on the same trade. And that's a lot more than I'm making right now. I am profitable still. I am trading mechanical as I want to, but I'm always looking to improve. And these are some things I'm testing and working on. So hopefully you guys can resonate with this, and maybe you found something interesting, like entering at these areas. Maybe you are already entering at this area and you make more money because of it. Maybe you have a tip for me how I can make this more mechanical. If you do, please let me know in the comments, because I always like to connect with traders. I always like to improve and those type of things. So yeah, this is a setup I recently took. Everything lined up here. I risk more on my personal account. I risk on average anywhere between 1 to 3% a trade, depending on the confluence factors. This one had a lot of confluence factors, so I risked near 3%. And on trades where there is no confluence factors, I tend to risk a bit less to increase my performance. So hopefully you learned something from it. Again, if you have a tip for me that I might be able to use, let me know. And if you have any questions, also let me know in the comments down below, because I'm always there to help. And then I'll speak to you in the next video. Thanks, guys.